Welcome to Market Brief After Hours, your go-to look at the global financial markets. We have a packed episode today. Wall Street is celebrating fresh milestones, geopolitical headlines are keeping energy traders on their toes, and we've got a massive divergence between domestic momentum and international caution. What are the final tallies for the major U.S. indexes?
It was indeed a historic day. Tech stepped back into the driver's seat, and that pushed both the S&P 500 and the Nasdaq Composite to fresh record closes, as well as new intraday all-time highs. To give you the exact figures, the S&P 500 climbed 0.58% to finish at 7,564. The tech-heavy Nasdaq Composite led the charge, rising 0.91% to close at 26,917. Meanwhile, the Dow Jones Industrial Average managed a modest gain, up 0.05% to close at 50,669.
That is a spectacular run, especially for the Nasdaq. What was the spark that reignited this tech rally?
The primary catalyst was a massive earnings beat and an incredibly optimistic outlook from Snowflake. Their fiscal second quarter guidance blew past expectations, and they announced a massive $6 billion spending plan with Amazon Web Services over the next 5 years. Snowflake's stock skyrocketed 36.5%, marking its best trading day ever. That single report revitalized the entire AI and enterprise software space. We saw the iShares Expanded Tech Software Sector ETF jump 2.8%, memory player SanDisk rise 3.3%, and chip giants like Qualcomm and Advanced Micro Devices climb 4.2% and 4.6% respectively.
Beyond the AI enthusiasm, there was also a lot of geopolitical noise during the trading session, specifically regarding the US and Iran. How did that play into the intraday market action?
It was a wild ride. Midday, reports surfaced that U.S. and Iranian negotiators had reached a 60-day memorandum of understanding to extend the ceasefire and restart talks on Iran's nuclear program. This news sent stocks to their session highs and cooled off oil prices. However, there's a catch. President Trump has yet to give the agreement his final approval. And to make things more complicated, after the market closed, Iranian state media reported that Iran's armed forces fired missiles at unidentified targets. Earlier in the day, the U.S. had conducted strikes in Iran, and Iran's Revolutionary Guard claimed they targeted a U.S. airbase.
So a lot of tension, but the market seemed to latch on to the hope of a ceasefire. How did oil react to all of this back and forth?
West Texas Intermediate crude futures ended the day slightly higher, up about 0.3% to settle at $88.90 a barrel, while Brent crude, the international benchmark, ticked down 0.6% to settle at $93.71 a barrel. Prices had been much higher earlier in the day on the military strikes, but they pulled back significantly once the ceasefire extension news broke.
Let's pivot to the macroeconomic data. We got the Federal Reserve's favorite inflation gauge, the Personal Consumption Expenditures, or PCE index. Did it bring any relief to investors worried about sticky inflation?
It did bring some temporary relief, though the long-term picture remains challenging. Headline PCE for April rose 0.4% on a seasonally adjusted basis, which was slightly softer than the 0.5% economists expected. That brought the 12-month inflation rate to 3.8%. Now, looking at core PCE, which strips out volatile food and energy, prices rose 0.2% for the month and 3.3% on an annual basis, matching forecasts. While the monthly numbers suggest pricing pressures might be starting to cool, the annual rates are still the highest we've seen since late 2023, well above the Fed's 2% target.
And how does this affect what the Federal Reserve might do next?
It likely keeps them on hold. Traders are currently pricing in a scenario where the Fed stays on the sidelines until late 2026, with some even betting that the next move might actually be a rate hike early next year. Interestingly, we also got a downward revision to first quarter GDP growth, which came in at an annualized rate of 1.6% instead of the initial 2% estimate because of weaker consumer spending and investment. At the same time, consumer spending in April met expectations with a 0.5% increase, but personal income was flat. This means consumers are dipping into savings to fund their spending, pushing the personal savings rate down to 2.6%, its lowest level since June 2022.
That's a very tight spot for the consumer. Before we move on to the international markets and Forex, we are going to take a very quick break. Stay with us. Welcome back to Market Brief After Hours. Let's cross the Atlantic now. European markets didn't seem to share Wall Street's optimism today. What happened over there?
European equities faced downward pressure as investors digested the ongoing geopolitical tensions in both the Middle East and Ukraine. The Pan-European Stoxx 600 index closed down 0.5%. Looking at individual countries, the UK's FTSE 100 fell 0.69% to close at 10,433. France's CAC 40 dropped 0.22% to finish at 8190. Germany's DAX lost 0.34% to close at 25,092, and Switzerland's SMI tumbled 0.9%. The outlier was Italy's FTSE MIB, which managed a gain of 0.5% to close at 49,825.
Were there any bright spots in Europe, perhaps on the economic data front or specific sectors?
Yes, defense stocks had an absolute field day. Ukraine's parliament ratified a massive 90 billion euro, that's about $104.6 billion, loan agreement with the European Union. On top of that, Swedish fighter jet maker Saab topped the Stoxx 600, surging 7.4% on reports that Sweden and Ukraine are finalizing a deal for up to 150 Gripen fighter jets. This lifted other defense names. German tank parts maker Rank advanced 5.4%, Germany's Rheinmetall rose 4.2%, and France's Exail Technologies popped 13.2%. On the data front, the Eurozone Economic Sentiment Indicator edged up slightly to 93.5 in May, beating expectations. We also saw French domestic producer prices plunge 2.1% in April, driven by a massive 22.1% drop in electricity prices. However, UK car production fell 0.7% year-on-year, and Spanish retail sales growth slowed to 0.8% in April.
Now, let's look at Asia. The markets there also seem to struggle, correct?
Yes, Asian stocks slipped from their record highs. Investors were highly cautious about the military strikes between the US and Iran and what that means for the Strait of Hormuz and energy-driven inflation. In China, the Shanghai Composite edged up a tiny 0.12% to close at 4,099, but Hong Kong's Hang Seng Index tumbled 1.27% to 25,006, dragged down by tech giants like Alibaba and Tencent. Japan's Nikkei dropped 0.47% to 64,693 on worries that rising energy costs might force the Bank of Japan to tighten monetary policy. South Korea's Kospi fell 0.53% to 8,185, snapping a four-day winning streak, and Australia's S&P ASX 200 fell sharply by 1.43% to close at 8,593, led down by rate-sensitive banking and real estate stocks.
Let's move over to the currency markets. Forex traders had a lot of technical levels to monitor today. Let's start with the euro against the dollar.
The Euro-USD pair managed a decent rebound, closing up 0.20% at 1.1650 after trading between 1.1586 and 1.1662. Now, technically, the euro is still under pressure. It's trading below its key moving averages, with the 50-day simple moving average at 1.1664, the 200-day at 1.1681, and the 100-day at 1.1698. However, we are seeing a solid support base forming around the 1.1580 to 1.1600 zone. If buyers can push the euro to close daily above the 50-day average of 1.1664, we could see a run toward 1.1681.
And what about cable, the pound-dollar pair?
GBP USD also recovered some losses, closing up 0.10% at 1.3440. It dipped as low as 1.3368, but saw aggressive buying on that dip, which pushed it back above its 200-day moving average of 1.3423. It remains just below its 50-day average of 1.3445 and its 100-day average of 1.3477. As long as the pound holds above that 200-day average, the near-term technical outlook remains constructive.
How is the dollar holding up against the Japanese yen?
The USD-JPY pair is consolidating right near its recent highs, closing down slightly by 0.16% at 159.24. This is a very tight trading range, just below the major psychological barrier of 160.00. The pair is still heavily supported by its key moving averages, with the 50-day at 158.78, the 100-day at 157.63, and the 200-day way down at 154.98. The structure still looks primed for further upside unless we break below the immediate support at 159.11.
Let's look at commodities, specifically precious metals. Both gold and silver staged incredibly dramatic reversals today. Walk us through those charts.
Fierce defense is the best way to describe what we saw in the gold market. Gold closed up 0.94% at $4,498 after dipping to a low of $4,367. That low actually tested the long-term 200-day moving average, which currently sits at $4,369. Institutional buyers stepped in aggressively at that exact level, creating a massive lower wick on the daily candle. Even though gold is still well below its 50-day average of $4,636 and its 100-day average of $4,794, holding that 200-day line is incredibly bullish for a short-term recovery.
And silver?
Silver followed a very similar script. It closed up 1.27% at $75.59 after plunging to an intraday low of $71.80. That recovery brought it right back to challenge its 50-day moving average of $75.70. It is still below the 100-day average of $81.16, but it remains comfortably above its 200-day moving average of $65.79. Keeping above that $71.80 low keeps the reversal narrative very much alive.
To wrap things up, let's look at some individual stock stories that made massive waves today. We already talked about Snowflake, but Dell also had an incredible day.
Dell was a standout performer, jumping 17% after reporting an 88% year-over-year revenue growth for its server division. That is its fastest sales growth since returning to the public market in 2018. If that wasn't enough, Dell also announced a massive $9.7 billion contract with the Pentagon to provide a software suite to the Department of Defense.
There was also some massive movement in drone-related stocks. What drove that sector?
Reports that the Trump administration is exploring funding deals with a group of drone companies sent these stocks into orbit. Unusual Machines closed up more than 59%, Red Cat jumped over 34%, AIRO Group Holdings rose 21%, and both AeroVironment and Kratos Defense surged more than 14%.
On the flip side, who were the major laggards today?
Photronics was a major casualty, crashing more than 36% after issuing a weak third-quarter earnings forecast of 39 to 45 cents per share, well below the 54 cents Wall Street was expecting. Tyson Foods also struggled, closing down more than 6% after announcing that their CEO, Donnie King, is stepping down after 5 years. Finally, the trade desk fell over 5% after Rothschild & Co. Redburn reinstated coverage on the stock with a sell rating and a price target of $112.
That brings us to the end of today's episode. If you find this useful, please follow Market Brief After Hours. We'll be back tomorrow with more insights, numbers, and analysis to help you navigate these markets.